Welcome back to another video. Have you ever wanted to get into algorithmic trading and creating your own trading bots, but you don't know how to code? Or have you been intimidated by the seemingly steep learning curve of learning how to write code using the API of some algorithmic trading platform or broker? Then this video is for you, since I will present a platform that allows you to create your own custom trading bots without writing a single line of code. Yes, that's right. All the trading and decision-making logic will be implemented in natural language so that even if you have no technical background, you can still create your own trading bots to trade for you. The platform I'm talking about is Option Alpha's new auto trading platform. Since the platform has been very well received, there's been a high demand for new users. But since they just launched, they're slowly scaling up the platform to work for more users. That's why they have a long waiting list with thousands of signups. But I managed to partner with Option Alpha, and if you sign up using my referral link from the description box below, you can skip to the front of the waiting line and start a 100% free trial. Note that, like the name implies, the focus of Option Alpha's platform lies on options trading. So their main proposition is to provide a no-code algorithmic options trading platform. That being said, enough talk, let's head over to the platform and let me show you how you can create your own trading bots without writing any code whatsoever. If you want to go through the platform alongside me while watching this video, you actually can do so by using my link below to start a free 30-day trial. This works without having to enter any credit card details. Besides letting you create your own trading bots, Option Alpha also supports backtesting simple strategies on historical data. So let's first go take a look at this. For this, we simply go to the Backtester tab at the top of the page and then click on New Backtest. This will bring up this sidebar that allows you to specify backtest parameters. As an example, let us test the efficacy of using options as a long-term constant hedge on SPY. People often buy put options as protection against a market downturn, so we will backtest a simple portfolio that buys one out-of-the-money put option after the other and analyze the results. For now, you can only backtest a strategy on one security at the time. Here, we will go with SPY. Next up, we have to specify the starting capital. Here you can choose from anything between $10,000 and $500,000. I will just choose 20,000, but feel free to try out different values. Thereafter, we can select up to 3 different allocation strategies. Here you can decide to allocate a fixed percentage of available capital to each position or a fixed dollar amount. Alternatively, you can also specify a cap for maximum allocation at once. The advantage of choosing multiple allocation strategies is that it allows you to compare the results of all of them in the analysis of the results. However, for this backtest, I will simply go with a 5% allocation per position, since we just want to backtest a simple portfolio protection strategy. For the duration, we choose the last 5 years, but you can go as far back as 2007. In the next step, we need to specify the entry scanner that we want to use for the backtest strategy. For this, we first start with the entry frequency. Since we simply want to have one long put position open at a time, I will go with the sequential here. Next up, you choose what strategy you want to backtest. Currently, Option Alpha only supports defined risk strategies. Here, we simply go with the long put. As the expiration time frame, I will go with 40 days, and as the delta of the option, I will choose 10%. Note that the Greek delta can be used as a measure of how far out of the money an option is while considering the current implied volatility of the options. So a delta of 0.1 is considered relatively far out of the money. Thereafter, we can enter a range of IV rank as an entry filter. IV rank is an indicator that tells you how high implied volatility is relative to the last year of data. Options traders use this to gauge if options currently are on the expensive or cheaper end. Since we want constant protection no matter what, I will leave this filter untouched, however. Last but not least, you can pass exit conditions for your strategy. Here you can specify a profit target, stop loss, and whether to close the position a certain number of days before expiration. Once again, I will leave this untouched for our strategy. That said, we can now click on the backtest button and wait up to a few minutes for the results. Once the backtest has finished, a performance report like this one will be generated. At the top you can see the selected settings, and right beneath that you can see an equity chart. As you can see, the strategy and the parameters we tested did not manage to generate a consistent return. As you might have expected, buying out-of-the-money puts as protection will slowly eat away at your capital and once in a while spike up when the market drops, such as in the beginning of 2020. So this strategy by itself does not seem to perform that great. But if you simply want to reduce the volatility of your long equity portfolio and don't care about giving up some of your returns for reduced volatility, this might not be a terrible strategy, especially if you manage to optimize some of these parameters and potentially manage to only buy protection when it is most needed in times of higher volatility. If we scroll down more, we can see a bunch of performance metrics. Here we can actually see that with only 2 wins out of 45 trades, the strategy has a win rate of only 4.4%. However, the biggest win of $9,164 is almost 10 times as big as the worst loss of $975. So as you can see here, this strategy has many small losses followed by a few but very big wins. Let's say you wouldn't mind some extra volatility in your portfolio. Then there might be an opportunity in taking the opposite position of this strategy. Instead of buying insurance in the form of put options, we want to sell this insurance. To test the validity of this hypothesis, let's backtest such a strategy. Once again, we will go with SPY and a 5% sequential allocation per position. However, since selling naked put options can be very risky, we will instead sell a put spread that hedges the short put option with a further out-of-the-money long put option. This will limit our upside more, but at the same time it will severely limit the potential for loss as well. We will sell the 20 delta put option and buy the 10 delta put option. Once again, I will leave the IV rank filters untouched, although it might be interesting to see the effect of this on the results. When it comes to the exit triggers, however, I will specify a profit target of 75% and tell the strategy to close the position in case there are less than 2 days until expiration. We do this since we want to limit the risk of being assigned from the short option position. After this strategy has been successfully backtested, we can once again see a performance report with the results. As you can see here, the performance chart looks very similar to the one before but flipped around. This time we have many tiny wins and a few large losses, which is exactly what we expected. All in all, this very basic unoptimized strategy still manages to yield positive returns over the time frame. Note that if you go to the overview page of your backtests, you can also compare the performance of up to 3 backtests for a more detailed comparison view. In the next step, let us use the platform to try to build a more advanced actual trading bot around this idea of selling put protection. However, before we do this, I quickly want to mention that Option Alpha also allows you to see other backtests besides your own. They have backtests in a bunch of different categories, and you can even filter backtests by a bunch of different metrics such as performance measures, symbols, popularity, and more. This is a great way to gain some inspiration and get ideas on what areas to explore next. That being said, let's now start building our own options trading bot. But before we start doing so, let me outline the strategy that we want to implement for our bot. We will have a collection of big market ETFs and equities that we want to use as our trading universe. For each of these, we want to check if there has been a big unusual down move recently. In case there has been, we want to open a bullish vertical spread position. However, instead of just selling a put spread by default, we want to check whether options currently are expensive or not, which we do by using IV rank. In case IV rank is over 50, we want to establish a short put position. However, if IV rank is below 50, we instead want to open a long call spread position. The payoff of these two positions looks equivalent. However, the long call spread has a positive vega, while the short put spread has a negative vega. This means one profits from increasing implied volatility, whereas the other one profits from decreasing implied volatility. Once a position is opened, we want to wait at least 1 day to avoid the PDT rule, and then take profit in case the position hits a 50% profit target or gets too close to expiration. With that being said, you now hopefully understand what strategy we want to implement, so let's now actually build our bot. To actually build the bot, we have to go to the Bots tab in the top menu bar. On this page, we click the Create Bot button in the top right corner to create our bot. We then need to pass some general bot parameters to get started. Besides a name and icon, we can choose to connect an account to the bot. By default, your bots will just be connected to an Option Alpha paper trading account. But alternatively, you can also connect your bot to your live broker account of one of the supported brokers. But I definitely recommend starting off by just paper trading it if you're still getting to know the platform. For the total allocation of this bot, I will just go with $10,000. Last but not least, we need to specify some position limits. Here we can tell the bot how many positions it can open in a day and how many positions it can have open at once. I'll go with 1 in a day and 2 in total, but feel free to play around with this. After creating a bot, you will have a blank bot with no functionality in your library. To actually add functionality to your bot, you have to use so-called automations. There are 3 types of automations that I'll quickly go over now. The first type is scanners. Scanners currently run every 15 minutes and they are there to find any potential new trade opportunities and turn those into positions. Next up, we have monitors that also run every 15 minutes and can be used to monitor and manage existing positions. Last but not least, we have events. Events can be set to be triggered on a repeating schedule right after or before the market open and close, after opening or closing positions, or from the press of a custom button. To give you a much better understanding of these automation concepts, we'll go over them in more detail now when implementing our bot. First off, let's start with implementing a scanner for opening positions. Automations are where all the decision making and trade logic of your bots is located. You can think of them as the brain of your bot. But like I said earlier, Option Alpha does not require you to code anything. Instead, they use decision trees that allow you to place different decisions after each other in natural language. This structure will become much clearer in a few minutes. When adding a new step to your automation, you can choose from many different possibilities. For instance, you can choose to open positions, close positions, send notifications, add tags, and more. However, the most common step for the decision-making logic will be the decision step. The decision action is divided into 6 categories. The first category is all about decisions about the underlying asset, such as filters for its price, implied volatility, moving average, and more. Then we have decision criteria for the bot, which for instance allows you to see whether your bot already has an open position, filter by P&L, and more. Besides that, you can also add decisions based on certain opportunities. An opportunity is basically a trade idea that you can closer inspect and analyze. Furthermore, you can make decisions based on existing position parameters, indicator values, and general conditions such as the current time or day. Don't worry if this seems overwhelming. We will cover lots of these examples in more detail now. The first decision we want to make in this scanner is to check whether the bot can currently open a new position. If your new daily or total position limitations have been reached, this will make sure that your bot can't open a new position. In that case, there's no point in checking anything else. In case you would want to add another condition to a point in your decision tree, you can just press the Add below the Yes branch or add another decision right in the decision menu. In case our bot can open a new position, we want it to scan for potential trading opportunities. However, for it to do so, we first need to tell the bot at which securities we want it to look at for trading opportunities. We then want to loop through that list and perform our decision-making logic on each symbol. To accomplish this, we create an input parameter of symbols. Input parameters can be added to your automation and accessed globally so that we don't have to restate them over and over again. For this list, you currently can specify up to 10 symbols. Here I will just go with a bunch of big name market ETFs and well-known stocks, but feel free to try out a bunch of variations and use your own lists of securities. Here you could, for example, backtest a simple variation of this strategy on a bunch of symbols to find out which to use. Note that you can clone the finished bot from this video and play around with it yourself if you create your free trial account. In the next step, we want to ensure that our bot does not already have an active position in the currently selected symbol, since we don't want multiple positions in the same securities. To test this, we add another decision step and specify that we currently have exactly 0 positions with the current symbol. As you can see, all of this is stated in clear natural language, so that as long as you understand English, you do not have to learn any other technical details for you to be able to create your own trading bots. If you want to edit the tag of a decision field, you can do so by holding Shift while clicking the decision field. Then you'll be able to rename the given field. We want to continue in case we do not have any other open positions in the current symbol. If that's the case, we want to check whether the current symbol's price had a noteworthy drop over the last 5 trading days. For this, we use one standard deviation, as that takes some of the security's usual characteristics into account. Only if the security's price has decreased by at least one standard deviation over the past week do we want to continue. In that case, we want to look at the current level of implied volatility. We do this by checking whether the IV rank of the current symbol is above or below 50. In case IV rank is above 50, implied volatility is relatively high, which means options are relatively expensive. That's why in that case, we want to sell an option position with a negative vega so that we could profit from any potential decrease in volatility. But before we open a short put spread position, we want to ensure that there is sufficient liquidity. We check this by checking that the bid-ask spread of this position is less than 20 cents wide. The exact position that we are interested in is a short put spread with a minus 0.3 and minus 0.1 delta with 40 days till expiration. Note that this is a relatively arbitrary choice, and you could definitely try out your own variations of values here. If the spread is tight enough, we want to open that position and allocate 5% of the available capital to it. As you can see, in the price field, option alpha has so-called smart pricing. What this does is it sends an order at about the midpoint of the bid-ask spread and then automatically updates this order until it gets filled. This makes sure that you might get filled at a much better price than just by submitting buy orders at the asking price and sell orders at the bid. Note that there are different modes of smart pricing depending on how fast you want your order to get filled. Now we're done with this branch of our scanner automation. All that's left to do now is copy the same logic, but for the case that IV rank is not above 50. In that case, we want to open a long call spread since options are relatively cheap. The long call spread will have a very similar looking payoff profile as the short put spread, but it will be a buy to open position instead of a net short position. With that, we are now done with the scanner automation. So let's hit save at the top and implement a monitor automation to manage any positions once they have been opened by our scanner. Since we can have multiple positions open at a time, the first thing we do here is loop through all positions in our portfolio. Then we want to check if this position has been open for more than a day. We do this so that we never accidentally violate the PDT rule that limits accounts with under $25,000 to make more than 3 day trades within a short time frame. Then, the first exit condition we want to check is whether our option position expires in the next 2 market days. If this were the case, we want to close the position. The only other exit condition we want to check is whether we reach our profit target of 50% of the premium. However, to do this, we need to check whether the given position is a long call spread or short put spread. In case it is a short put spread, we check if the premium decreased by 50% since it was opened. If this were the case, we gained 50% of max profit and want to close the position by buying it back for half the price that we sold it for. If our position is not a short put spread, it must be a long call spread since the bot does not open any other kinds of positions. In that case, we check if the premium increased by 50% and only then do we want to exit the position. After doing that, we are now done with this automation as well. Last but not least, you could also, for example, create a schedule or a button to trigger an event automation. However, I will not do this here since our strategy does not require this and the event automation works just like the last 2 presented automations. Note that a cool feature that Option Alpha provides is that you can save your automations and reuse them in other bots or share them with the community. You can also save entire bots as templates to reuse and share. At the same time, there's a very active community that posts countless of their own bots and automations that you can easily clone, discuss, customize and work on in your own account. To turn on your bot to trade in the account that you specified in its settings, you simply can flip the switch at the top to turn it on. It will then automatically run whatever automations you set it to run. I will now let some time pass and then show you the rest of this page in action. Now that some time has passed, let me outline the other tabs of this bot. All the way on the right, you can view all the logs of your bot. Here we can see all the automations run and any potential warnings or errors. This is a great way to double check that your bot is indeed doing what it's supposed to do. In the Positions tab, you can see any currently active positions as well as previously closed positions. Option Alpha of course also allows you to manually close or override any open positions or even manually open new positions right from here. Last but not least, you can navigate to the Dashboard tab to view a general performance overview of your bot. Note that if you want to clone the bot from this video and haven't followed along so far, I'll leave a link in the description box for you to clone the bot. However, keep in mind that the intention of this bot is to show you the platform and not to be the best performing bot, so I wouldn't really recommend cloning it to live trade it right away. Before I conclude this video, let me quickly state some general recommendations for developing bots with Option Alpha. First of all, I highly recommend starting your bot creation journey with research. Try to come up with an idea, build a hypothesis around this idea, and use the backtesting suite before creating and trading with the bot. For idea generation, Option Alpha also has a huge educational library where Kirk discusses and walks you through countless potential strategies. An awesome thing about this is that the lessons can now be directly set into practice with automations. In fact, he and a bunch of community members have already started creating and sharing bots based on some of Option Alpha's videos or podcast lessons. Another recommendation of mine is to always thoroughly test your bots and let them paper trade before deploying them with any real money in your actual broker account. That being said, in this short overview of the Option Alpha platform, we just scratched the surface of the possibilities that the platform offers. However, that also means that using all the platform's features to their full potential comes with a certain learning curve. Nonetheless, this learning curve is of course way flatter than that of first learning how to code and then learning how to use the API of some code-based algorithmic trading platform. Furthermore, Option Alpha provides you with loads of educational material to make it as easy as possible to get to know the platform. However, even though I have to say that the possibilities that Option Alpha offers are incredible, the platform is still not as flexible as a code-based algorithmic trading framework such as Quantconnect. The possibilities of a fully unrestricted platform without any pre-made decision blocks will unsurprisingly exceed what is possible here. Furthermore, a platform such as Quantconnect allows you to import custom data, create advanced AI and machine learning algorithms, as well as backtest all your strategies on historical data. That said, like I said before, the learning curve of this is obviously much steeper as well. However, if you already know how to code, you could check out my free Quantconnect algorithmic trading course in which you will learn everything you need to know on how to get started coding your own trading bots. That said, if you're okay with giving up some flexibilities to skip this steeper learning curve, the features and capabilities that Option Alpha's platform offers at such an incredibly low barrier for entry are amazing. Building your own custom portfolio of completely automated trading bots is an absolutely great way to get into algorithmic trading. Furthermore, the platform is still new and more features will be added in the future. If you want to start developing your own custom bots and try out the platform, Option Alpha offers a free 30-day trial that does not require any credit card information. However, currently, you need to sign up for this through their very long waiting list. Luckily, they offered me a partnership opportunity where if you sign up using my link and code from the description box below, you can skip the waiting list and start your free trial right away. That said, I really hope you enjoyed this video. If you want me to create more content in which I create more advanced bots using Option Alpha, let me know. Don't forget to smash the like button, subscribe, and turn on the notification bell. Thanks for watching.